Okay, we've got a question here for accrual versus cash accounting. And it says, in the first year of operations, Benson Proprietary Limited earned $160,000 in service revenue, $24,000 which was on account and still outstanding at the end of the reporting period. So the remaining $136,000 was received in cash from the customers. The company paid expenses of $40,000 in cash, which included $15,000 for insurance that will not be used until the second year. Additionally, there is $22,000 still owing on the account at the end of the reporting period. Now, what we're required to do is we're required to report our profit in cash accounting and accrual accounting. So let's do the cash accounting first. So, cash. Okay. All right. Now, we've got income. We've got expense. All right, so now my income for cash is I'm taking only the cash flows in, or cash coming in. Now, it's told me here that I've got $136,000 was received in cash, so that becomes my income. And if I read on, the company paid, which is the important bit, $40,000 in cash. So I've got $40,000 there in cash. And quickly scanning the question, it doesn't tell me any other. So that means my profit is $96,000. Now, let's look at the same thing, the same information from an accrual perspective. So my accrual perspective, now we've got to recognise when the transaction's happening. So not necessarily cash flows in or cash flows out, but we're now recognising transactions. Now, it says that Benson earned $160,000 in service revenue. So there's my income straight away. $24,000 which was on account, still outstanding. Okay, so that's my service revenue there. That's the remaining cash. The company paid cash expenses of $40,000, which included $15,000 which will not be used till the second year. So I've got $40,000 here, and $15,000 relates to year two. So I'm going to have to take that out. So that gives me $25,000. And it says, additionally, there is $22,000 still owing on the account at the end of the year. So it's not cash, it's got to be accrual. So that's $47,000. So this is my accrual, and this is a prepaid. Okay, so now this figure becomes my expenses. So I've got $47,000 there, which gives me a profit of $113,000, $113,000. Now that ticks off my profits for A and B. Now the next thing it says, debate which basis of accounting you think is more useful for decision making. Now I'll just show you something in relation to cash accounting and accrual accounting, and we'll do our debate in a roundabout way. The accrual. Okay, so cash v accrual. I'll do my cash accounting first. Now I'm just going to map out what cash accounting could look like. I've got income and I've got expense. Now, let's have a look. January, February, March, April, May, June. Let's just do 6 months. Now, my income could start really low in January, and then it might peak in February, might drop down for May and April, March and April, I should say, not May, and then it might drop a little bit for May, and then it's going to skyrocket for June. Now, that's just cash flow. Receive cash, receive no cash, receive a little bit less cash, no cash, more cash. Now let's just map out my expenses. My expenses could start the same way. I could start low, so it looks like I've got a huge profit in, I could start high, so I've got a huge profit in January. I'm going to continue that. I'm going to pay a lot of money in the first parts of the year, and then I'm going to drop it down, and then a little bit for June. Now, to work out profit for those particular periods is very hard. It looks like we've got no profit here because we've got a loss. We've got a tiny bit of profit there. We've got another loss here in March. We've got a tiny bit of profit here in April. May, we've got no profit or loss. And then in June, we've got a little bit of profit. Now, if I look at that from an accrual perspective, so let's now look at my accrual. I've got my income and I've got my expense. So my income and my expense. Now what happens with accrual accounting is the numbers are evened out. So we might have a little bit higher and then a little bit lower, then a little bit higher, then a little bit higher. And then my expense will work in a similar sort of way. So we can say that our expenses can flow in a similar sort of fashion, matching our revenues. Now we can see clearly what our profit is. We can see that our income is well covering our expenses. We're not having to wait for a financial end in order to determine, how much money we've got or how much money we don't have. We look like we're making profits here. Whereas it's hard to determine over a period of time here, are we making profits or are we making a loss as far as cash flow goes. So from a business perspective, what we're really looking at is the preferred method is accrual accounting. So large business especially true.